Hi everyone, my name is Rishit. Today is the 19th of March 2023 and I'm going to be going over my weekly prediction for SPX for the week ending the 24th of March 2023. As usual, before starting the video, I want to make an extremely important disclaimer that it is highly unadvised to take trades based purely off of the information presented in this video, since all information in this video is completely for educational purposes, and it is advised to consult a financial advisor before taking any positions based on the information in this video, since all trades are subject to market risk and can result in significant losses if not taken with informed caution. And now that we've covered the disclaimer, we can move on to the video. As usual, we'll be going over the monthly charts, the weekly charts, and finally the daily charts. And then the option chain as well. So from the monthly charts, we can gain only one thing really, which is the downward trend line and a few supports and resistance. As you can see, this downward trend line touches 3 points, which makes it a relatively strong trend line. However, until more points touch, the more points that touch the trend line, the stronger it gets. For the candlestick pattern, for the monthly charts, there isn't one actually as of now, because this month is still in progress, so we can't take a decision yet because the month hasn't ended. As of this month, it could have been an inside bar, but the high was higher than the mother candle, so it doesn't count. And all we can gain from this is a very strong resistance point at 4101.44, which is a very, very far-fetched resistance as of now. But when the price does move closer to it, we can definitely see that coming into play as well. And I have marked another important resistance point, which is relatively close to the market at 4002.42. And here we can also gain the immediate support point at 3836.80 and a further support at 3758.35 and a long-term support at 3494.44. Now that we've covered the monthly charts, let's go to the weekly chart. Here's where things get a bit more interesting. As you can see, there is a clear piercing line candlestick pattern, which is a very, very bullish candlestick pattern, meaning that the chances of an upward reversal are very, very high in the coming week. Because what this pattern signifies is a very strong red candle and then a green candle, which means the bulls have taken significant control of the market and rallied it upwards. Because of this, it is safe to say that the probability of an upwards rally in the coming week is significantly high, since this is one of the strongest bullish patterns that can be found. From this, also, we can gain a short-term resistance point at approximately 4054.40. Finally, let's move to the daily charts and complete the technical analysis part of this video. Here, yet again, we have a very clear inside bar pattern, which is basically a large mother candle, and the second candle is completely engulfed by the previous candle, and the high has to be lower than the high of the mother candle, and the low has to be higher than the low of the mother candle, and the body has to be completely inside, which, as you can see, this pattern completely matches. And as a rule of thumb, a trade should not be taken if this pattern is formed until and unless the high or the low of the mother candle is broken. So, based off pure technical analysis, we can just gain the immediate no trade zone for this week, which is the high and low of the mother candle, which is at 3,964 as the high and 3,864 as the low. And until the market breaks one of these, it is highly unadvised, as for analysis, to take a trade based off of technical analysis, since it means that there's indecision in the market as it wasn't able to break upwards or below the mother candle. And once these two break points are broken, then it is a very, very strong intention, whichever direction it goes. And based off the weekly charts piercing line pattern, it can be taken into account quite clearly that the probability of this going upwards is significantly higher, since piercing line is a very, very strong bullish pattern. As you can see in the last 5 candles, bulls have taken a lot of control over the market, and it can be expected that the market rallies upward for the coming week. Now that we've covered the technical analysis part of this video, let's move over to the option chain. As you can see, for the monthly expiry, the highest CE is 3,900, as the same for the highest PE, which is a no change from last week's value. And the premium for 3,900 CE is 126, and the premium for 3,900 PE is 95.13, with the put-to-call ratio at 2.12. Next, for the weekly expiry date, we can see that the highest CE is 3,900, and the highest PE is 3,950, with a plus 50 in the PE, which can be taken as a strong bullish signal, so there's no change in the PE and only a change, no change in the CE and only a change in the PE, which shows that bulls have had a lot of control over the last week, which we saw in the piercing line candlestick pattern, linking both of them together, and we can take as a strong standalone bullish pattern, bullish signal. For 3900 CE, the premium is 72.40, and for 3950 PE, the premium is 70.74, and the put-to-call ratio is 2.21. Finally, for the daily expiry, we can see that the highest CE is 3950 and the highest P is also 3950 with a plus 100 change in CE and a plus 50 change in the CE, plus 100 change in the PE. Where here the CE and PE are both higher than last week by 50 and 100 respectively. Now, technically this should be negated altogether since both of them have moved. However, since the PE has moved twice as much as the CE plus 100, whereas CE only moved plus 50, this can be taken as a light bullish signal as well. So we have no signal from the monthly expiry from the option chain. We have a strong bullish signal in the weekly option chain, and we can even take this as a light bullish signal from the daily expiry. And I'll explain the relevance of this finding towards the end of the video. The 3950 CE's premium is 12.75 and the 3950 PE's premium is 43.08 with a put-to-call ratio of 2.51. Now, to conclude the video, let's cover all the information that we gained. We have an inside bar pattern which gives us our no trade zone, the high and the low of the mother candle at 3964 and 3864, a 100-point range. Here is a no trade zone that we have identified, and it is unadvised to take a trade until this trading range is broken, which is why I've highlighted this option for my view. However, since we have a strong piercing line pattern, I have a neutral view with an upwards bias since as of now the trading range has not been broken, but I'm saying clearly that there is a high probability that the market breaks upwards because of the candlestick pattern of piercing line. Next, in the option chain, there's also a slight confirmation since the weekly chart shows a strong bullish signal and the daily chart shows a light bullish signal, which acts as a confirmation from the option chain as well. However, it is to be noted that this week there's also going to be the FOMC press conference and the Fed interest rate decision, which means that although technically and using the option chain, the analysis shows that the trading range is most likely to break upwards and the market is more likely to go upwards, it should also be taken into consideration that these two events can very easily sway the market. So it is advised to wait until at least March 22nd or March 23rd until these events have bypassed to then take action, because based off of the information that is released from these two events, the market could change very quickly. However, from a technical analysis standpoint, I do say that the trading range breakout range is the high and low of the mother candle, and a trade should not be taken until it's broken, but the probability of it breaking upwards is significantly high. And on this note, I would like to conclude the video, and I'll see you in my next video where I review this prediction and make a new one for the next week.